Welcome everyone. I'm your host Nealbawa. Welcome to this Opportunity Zones webinar. This is truly an unprecedented new real estate tax strategy. It's also a great strategy for those of you that are looking to go out there and raise money. Let me start off with a number, and that number is 100 billion, right? So $100 billion is the size of this opportunity, which is truly staggering. But just looking at the size of the funds being created in the market, the opportunity zone funds, I think we're going to hit that target very easily. So we'll start off today by doing a quick introduction about me, and then we're going to talk about what an opportunity zone actually is and how did we get started with opportunity zones. We're going to discuss all the different tax benefits of opportunity zones, and then we're going to talk about the types of gains that are eligible for an opportunity zone investment. We'll talk about the time frame and the type of OZ investments that are eligible. And we'll do a comparison of an opportunity zone investment versus a non-opportunity zone investment. We'll figure out what the dollar difference is when you invest in an OZ project versus investing in a regular project. We'll also, at the same time, one of the things that I'm going to add today is I'm going to talk about the pitfalls of opportunity zones. So I was very excited when I went to Los Angeles recently, and then I realized, oh, there's a bunch of problems here that people need to know about when they're making their investment decisions. So we'll talk about pitfalls because these are very serious. And then we're going to finish off with a fight. We're going to have OZ fight 1031, and we're going to talk about which one is better. And we'll finish off with a review and some questions from all of you. Now, let me start off with the most boring slide of my presentation. We are not investment advisors. This webinar is provided for educational services only, purposes only. We're not CPAs, and this is a tax benefit webinar. It's very informational in nature. You must discuss the details with your CPA before you make investments in opportunity zones. All investments involve different degrees of risk. Be aware of your risk tolerance level and financial situation at all times. Let me get a better pen color. You're free to accept or reject all investment recommendations made by us. Services that we offer are subject to market risk, may result in loss to your investment. As you know, a recommendation is not a guarantee for the successful performance of an investment. We cannot guarantee against losses arising from market conditions. Do not invest your money on a recommendation alone. Consult a professional advisor. All right, so just a little bit about me. I'm the founder and CEO of two companies, Bawa-Grocapitus and Multifamily University. I believe that most of you on this webinar know me, and many of you have invested in my past projects. So you all know that I'm very passionate about multifamily investing. I spend hundreds of hours each year traveling throughout California and the rest of the country, and I talk about how apartments are a great asset class for long-term wealth building. Then I share the insights that come from my portfolio and from my partner's portfolio, and there is real opportunity for data scientists like me to use analytics and insights to improve my investors' returns. So let's get started. What really is an opportunity zone? What is it? Let me quickly take a look to see if there are any questions. Okay, good. So an opportunity zone is a designated census tract that has lower than normal growth or lower than normal income or both. And the government, the federal government, is offering tax incentives to boost growth inside of that zone. So that's the definition of the zone. And these census tracts are qualified by local and state governments in April of last year. So this presentation was made in December. So the local and state governments came together and said, okay, we're going to designate certain census tracts. And so it was a job of the governors actually to pick them. Now, most states have their census tracts available with interactive maps. And so you can just go in and type in Opportunity Zones Arizona or Opportunity Zones Hawaii, and you'll see them. I'm going to click on this link to the California map because I want to point a few things out to you. Oops, let me escape out of this. There we go. And we'll wait for that to come up on the screen. And so this is the California map. Takes a few seconds to load because California actually has a lot of opportunity zones. What's interesting is that California's opportunity zones are not just in some depressed area. So it's not in rural Bakersfield. It's not in areas that might be 100 miles east of San Diego. There's actually opportunity zones in very good areas. So one of the very best opportunity zones, one considered to be a terrific opportunity zone, happens to be in the San Francisco Bay Area. And that was a real surprise to me when I saw that, because it's right here. So I'm going to zoom in. And so here's one in San Jose, and you can see these little ones in San Jose as well. But as you go up, you'll see that there are opportunity zones in Oakland. And these are not the horrible parts of Oakland. They're actually decent parts of Oakland. And you see how many opportunity zones Oakland has. So each of these is a separate opportunity zone. And so there's a lot of money to be made right here for people that are interested in Bay Area projects. As you know, we've never offered a Bay Area project. We are going to be offering Bay Area opportunity zones projects. So that's because, as you know, OZ sometimes Bay Area projects don't pencil out in terms of cash flows, but opportunity zone investors are a little bit different in their thinking. Now, let's talk about how did those governors actually pick the OZs? How do you pick an area that is lower than normal growth? Well, the rule that was applied was that either the opportunity zone has to have a poverty rate of 20%, or its median household income is 80% or less than the state or metro's household income. So let's say the metro's household income is $50,000. If this area was 40,000 or under, it would be eligible to be nominated. Not every area like that did get nominated, so the governors looked at a lot of other things. And then the areas that are touching that opportunity zones. Let's think about an OZ being a triangle, being a rectangle, I'm sorry. So it's got four sides, right? Well, one of the other rules was that the four edges should not be more than 125% of the income level of that low income community. Basically, what they were trying to do is trying to stop governments from designating areas that are really, really rich, that are around a small, poor area. They didn't want to do that because they felt like if the areas around it were really, really rich anyway, then that area is going to gentrify in the future anyway and should not be an opportunity zone. So those were the two benchmarks that they used. Now let's talk about the bottom line of how many OZs were picked. 57% of all neighborhoods in America were up for consideration as OZs, and they designated more than 8,700 census tracts. Just to give you an idea of how big this is, the last time we did opportunity zones in America, there were 40. That's right, 40 in the entire country. This time we designated 8,700 of them. Now, what's really interesting is that the Brookings Institute also found that 19%, this is a key number, 19% of designated opportunity zones were also found to be in already gentrifying areas. So these are areas that, are already doing well. Let me get my marker again. There we go, pen. They were already gentrifying. And how do you figure out whether they were gentrifying? Well, they had a high rate of home price appreciation. They probably also had increasing levels of income. So keep in mind, if you're an investor, you want to go and find these 19% of opportunity zones that were gentrifying to reduce your risk as an investor. I certainly am going to do that for my fund, the opportunity zone fund that I'm creating.